we've carried out. As you know, some of you have attended the previous ones, bringing philanthropists, investors, entrepreneurs and academics together. Thank you for everyone's commitment coming on to support this. I'd also like to welcome those of you who are new to this forum. And I think everybody can see the bios that were circulated yesterday. As you know, social enterprise plays a huge part in Scottish society. There's over 6,000 social enterprises in Scotland, and quite frankly, we're going to need them more than ever. The pandemic's increased demand for social enterprises, and at the same time, it's cut off many of the usual sources of funding from things like activity spaces, cafes, events, etc. This is why it's important for us all to look at what we're doing, what we could do, and what we should do to support and extend the impact of social enterprises. The last 3 editions of the forum, we looked at some of the problems facing social and impact investment and some of the responses to those challenges. And whilst the details differ, the essence of the problem is about surviving, maintaining a viable business model, and finding ways to satisfy increased demands. Now, talking about things is good, but action's often better. And towards the end of this hour, Dr. Wendy Wu from Edinburgh Napier University to set out some of the next steps that are being thought about. And there's a point to note in that we intend to finish at 12 o'clock or slightly before, because I know that you're all very busy, and it's a wonderful thing. Today, it's a great pleasure to welcome Danyal Sattar, the CEO of Big Issue Invest. He's the super sub, taking place of his colleague Nigel Kershaw, but I'm sure Danyal will actually give us so much to learn from his experiences. He'll talk about what he's up to, and he'll perhaps give us some of the stories behind some of those activities. I have a few questions that I'd like to ask Danyal after he's spoken, but then I'd like to bring others in to ask questions or to react or to reflect on what's been said in any way that you feel appropriate. So feel free to submit questions on the chat facility or to indicate your desire to speak in the usual way, which can be by using the icons, by waving frantically, or just blustering in by opening up your microphone and jumping in. All of these are equally acceptable. A little bit of background to Danyal. He joined the Big Issue Invest as CEO in December of 2018 and has more than 25 years experience in the social, ethical investment, charitable and impact investment sectors. Previously worked on social investment for foundations such as Joseph Rowntree Foundation, Esme Fairbairn Foundation and Access Foundation, as well as for social investors Big Social Capital, Charity Bank and Aston Reinvestment Trust. So his experience in this sector and pedigree is absolutely second to none. So on that, I'm going to hand over the microphone and put myself on mute and ask Danyal to share some of your experience with us, Danyal.
Great. Thank you. Thanks, Bob. Thanks for that very kind introduction. I think there are people on this call who I'd kind of defer to in their social investment experience. Alistair from Social Investment Scotland, of course, which is, I know you know them in Scotland, but we know them across the United Kingdom as one of our leading social investment organisations. And there are colleagues, of course, from the social enterprise side. I think my colleague Susan Axelmore from Homes for Good is on there. These are the people who actually do the work. All we do is hand over the money, and the social impacts is done by the people in the organisations on the ground who deliver. So with that kind of what are we? What is Big Issue Invest, and where did we come from? So this is where we've come from. This is the Big Issue. So this is the magazine that's sold by homeless people across the country. It is they buy it from us for £1.50, and they sell it to people on the streets for £3. So the £1.50 margin that they make is what they earn, and it's a trading solution that Big Issue was set up to do, so that people could earn their way out of poverty. I think in truth, people are earning their way from destitution into poverty but that is a positive step forwards, and people progress out there. So actually, this is a magazine that I bought. I bought yesterday. The big issue vendors are out on the streets again. This vendor was wearing a visor, gloves, and he sold it to me through contactless. So we came back on the streets on the 6th of July in our partner organization, the Big Issue magazine, and selling now. We expected 200 vendors back in the first week, and we got 1,000. And normally we have about 1,700 people selling the magazine up and down the country. So a very good return to the streets by the magazine. So why did the Big Issue set up Big Issue Invest? And this came from an observation that John Bird, now Lord Bird, our founder of the magazine, had. He said in his John Bird-like way, he said, not everybody knows a rich bloke. And what he was referring to was Gordon Roddick. And Gordon Roddick, of course, was the husband of Anita Roddick, who set up the Body Shop. And it was the money from the Roddicks that made it possible for the Big Issue to get through some difficult early months and years of its existence. So from that observation in 1991, John set up something called the Social Brokers Network, which eventually, under Nigel Kershaw, our founder, morphed in 2005 into Big Issue Invest. So Nigel, an extraordinary man. I know he's very sorry not to be here today. Unfortunately, there's a imminent bereavement in his partner's family, and he has to be there to support her at this time. So Nigel, he had this vision, and his vision was of a social merchant bank. Now, I don't think he really quite knew what a merchant bank was, but he liked the idea. He was also inspired, I think, by the idea of the kind of Venetian merchant bankers and merchant traders from many years ago. But what he basically thought is that if there was a financial need expressed by charities and social enterprises, he wanted to found an institution that could solve those needs. And that's given us the array of products and services that we have. So we start from at the startup end, we run a program called Power Up, formerly Corporate Social Venturing, and that provides small investments of up to 50,000 into startup charities and social enterprises. So we're working in Scotland at the moment with support from the University of Edinburgh, from Brodie's, from Aberdeen Standard Investments, Experian, and others who are supporting that program, which brings both investment and technical assistance to those startups. We've probably put about £2 million out in that over the last 5 to 7 years under that program that's ongoing now. Then we move into two areas that I suppose are our core business areas. We have about £23 million worth of lending capacity to make small loans to charities and social enterprises. That is that market of small loans. By small, we mean typically under £150,000 loans and up to £250,000. This is always a difficult space for bank lenders to come into. For mainstream investors, the returns on making those loans for the amount of work that goes in is kind of slightly it's disproportionate. You make more money making a larger loan. So there's a known kind of finance gap at this small end that various government programs and initiatives over the years have tried to tackle. So we're also trying to tackle that for our charity and social enterprise clients. So that we had about 160 live loans at the moment on that lending side. Most are, as I said, at that smaller end. We do have some larger loans to community housing organisations under a specific programme for the Greater London Authority to support community land trusts and other approaches like that. So if that's one kind of core side of the business, the other core side of the business is our fund management operation. So we are an FCA regulated fund manager. We have 3 funds. Nigel set up the initial social enterprise investment fund because we thought small loans are great, but what about money for growth? How is that being provided in the marketplace? And at the time, there wasn't really anything like that around. So Nigel set up that first fund. It closed at 9.7 million. I remember him trying desperately to get it to 10 million, but he didn't quite get there. Then that is now fully invested, and it's about 80% return to investors at the moment. Return wise, we think we might get all our investors out whole. Then the second social enterprise investment fund, 23 million. It's currently in its investment period. It's about 60% committed at the moment. Again, looking for that growth social enterprise sector space. The third fund we've got is an outcomes fund. So this is where, with the backing of Big Society Capital, we're looking to support charities and social enterprises where they are paid on results. So normally, if you're paid on a contract, you deliver, and if you're lucky, every quarter, you stick in an invoice, and if you're lucky, in some weeks or months, you're paid. But where you're investing on the basis of outcomes, such as reducing the number of people who turn up at accident and emergency with drug or alcohol poisoning, if you're paid on the outcome of that reduction, your outcomes are going to come not just after weeks or months, but possibly years down the line. And that's when you get paid. So essentially, you have a longer, deeper cash flow hole to fill. And that's the nature of what we do. We basically provide that cash flow. So that's the core of what we do. Around the edge, we also do various things around impact advice. So we are impact advisors on two mainstream funds, the Aberdeen Standard Investment UK Jobs Fund, which invests in companies that create jobs in the UK. It's an interesting fund, and it's a kind of alignment fund rather than direct impact. That's very small, but the social impact reports are out there. And then the second fund, it's about 200 million in the Columbia Threadneedle Social Bond Fund. Similarly, we provide impact advice to that fund, and we kind of co-founded both of those initiatives. Though all the fund management credit goes to the institutions that got them going. Aberdeen Standard have been fantastic in getting the fund going, and Simon Bond at Columbia Threadneedle, it was just something he'd wanted to do for years by the time he picked this up. And I think those reflected something of Nigel's founding vision, that he wanted things that were open to the public to invest in, because that's one of the problems about the current wave of impact investment. It's harder for people to participate, perhaps, than they have in the past. So that's the scope of what we do. How we do it? At times we do it really badly, I have to say. We can be slow, inconvenient, painful, obsessed about micro details. We sometimes have to think through what the social impact is that we're after on our feet. I think sometimes very well. I think on the small lending team, they found a way of making fast loans effectively and getting repaid, which is the key thing. And I think we do that by hiring different people. One of Alan Tudhope is a former cycle courier. I think his hands got cold in the winter, so he started doing people's books, and he found himself an unqualified jobbing accountant and finance director. So he's now one of our lending team. Natalia Fernandez, Portuguese by origin, will smile at me with a wonderful smile and say, "Daniel, I don't know why so many BME women entrepreneurs want to take loans from me," and she'll just smile. And her nature and personality as a relationship manager reaches people and builds trust rapidly. Kevin Lloyd Evans, who heads that team, half Asian from Bradford, went to university as a mature student after some years. Again, very kind of different background into our sector, and they and others in their team have learned how to do this. Hecla Goodman, who runs our Power Up program, she's a media entrepreneur and a footballer by background. So again, an unusual journey, but one that I think reaches that market well. So what we're doing, I think, is if I come to a kind of second part of this, is we are doing nothing more than what generations of people have done before us. So in 1542, Sir Thomas White set up the Sir Thomas White Loan Charity in Leicester, a town, a city in towards the Midlands of England, and he set that up all those years ago to make loans to apprentices to buy tools so they could become craftsmen. I think history records that gendered phrase. I don't know if there were cross women as well as cross men in there. But if you could not afford your own tools, you couldn't become a craftsman, and you could not thereby increase your income with that step up in recognition. So by making these small loans to apprentices, they could buy their tools and they could become craftsmen, opening up access to being a craftsman to people in poverty. So that was in 1542, and the Sir Thomas White Loan Charity is still going to this day. So you can go to Leicester and you can look up that you can visit the Sir Thomas White Loan Charity, and it is still making microloans. I believe 1/70th of any surplus goes to the city guild that basically did the back office administration for the Thomas White Loan Charity all those days ago. We kind of think the back office is something new in banking terms. Oh no, it's not. 1542, they were out there running a back office, and that was used to fund an arts program in Birmingham in the last couple of years. So extraordinary. In 1775, a year before Adam Smith wrote The Wealth of Nations, before the independence of the United States of America, a group of Irish canal diggers saved money in a pint pot mug on the bar of the Golden Cross pub in Ketley. Well, it was Thomas Ketley's society, and that was the world's first building society. They saved to buy building materials to build their own homes. You can go through 100-year after 100-year periods, and you'll find waves of credit unions. You'll find the agricultural cooperatives in the Netherlands. They're now grouped together into Rabobank, one of the biggest financial institutions in the world. So what I think we're doing at Big Issue Invest is nothing more than what generations of people have done before us. They've recognized there is a social need or a social problem. They've recognized the ability of applying funds to solve that problem. They've raised money, either their own from wealthier sources such as Sir Thomas White, or collectively through the efforts of the economic migrants of their time, those Irish canal diggers, to solve those social problems. And that's what we are trying to do today. So I put us in that long history of what we are trying to do now. I think why we have to do it generation after generation is people forget. People The institutions grow larger, they become mainstream, they serve a wider market, and they perhaps move away from that social root that they were initially founded from, which is why I think we have to reinvent it time after time after time again. So I think, Bob, I've spoken for some 20 minutes or so. So I think, having talked a little bit about Big Issue Invest and talked a little bit about the historic context we're in, maybe just a few words on the pandemic before I hand over to you for some questions. So in March, I think we were already, as I'm sure many of you were, responding to the pandemic prior to any government action. But within 10 days of lockdown, on our lending side, we had 170 loans at that time, and we had 81 of them we rescheduled within 10 days. So it was an immediate response. And, don't think that we did anything particularly heroic about this. We did the very best thing we could do, which is stop taking money out of people's pockets. So stopping loan repayments, stopping interest payments, that was just the best thing that we could do. And thanks to the support of our funders, we could do that because they in turn waived their interest charges to us. So as we all moved in sequence, it would work. If we hadn't moved in sequence, it would have broken somewhere along that line. Our fund management side, about 30 investments for a similar pattern of rescheduling. There we have the benefit of a longer time period for returns to our investors. So that was an easier one for us to do. But that's what that was a microcosm of what people have been dealing with across our sectors. Our investment committees see this as it's the worst recession they've ever seen. Is what we are investing into, and I don't dispute that. I think there are some sectors that are carrying on. Social housing is generally doing well. One of our board members said he's never had such low arrears. The last thing people want to do in this pandemic is become homeless. He's been very fortunate in that. But other sectors, anything on the performing arts side, anything public facing, has had to shut or pivot. And when I held up the copy of this big issue magazine that's being printed, it took the magazine 10 days to get an app on the App Store, a little longer on the Google Store, but in 10 days we were digital. So that's the kind of speed that we see across the piece as a response to this pandemic. So let me pause there. Bob, over to you and lead me through whatever questions you
Yeah, it leads on from what you've just been saying, Daniel, there about the kind of the impact of recession, not just on your own operation, which you've detailed for us quite succinctly there, but more broadly, when we've got potentially large-scale unemployment for the first time in a generation.
Yeah.
What are your thoughts in terms of the potential impact and how we might cope with those kind of pressures and forces?
Yeah, thanks, Bob. If there's a way of, I don't know if you can see me on your screen or whether I'm small, but if there's a way I can share, if I'm visible to you, that's great. If there's anything I need to do, Bob, just tell me.
Yeah, no, we can. Well, certainly on my screen, you're occupying the main part of it.
Great, excellent, and I thank you. Yeah, this it really did strike me the other day that I was trying to count up the number of recessions that I've been through in my working life, and it's quite a few. I suppose as a student, I was. It was the recession of the 1980s was there in the time of my kind of university and postgrad, and that kind of level of economic scarring from unemployment is something that we have ducked in the last 20 years. The 2008 was a massive shock, but we got through it with the gig economy, and we got through it with no real increase in people's wages generally, or very small ones. And we got through it with a decline in living standards and a hit on the poor. So we didn't, though, have mass unemployment. So what we're about to face now, coming out of the pandemic, is something that we have not seen for some time. So this is one where I think any one of us who's been through previous recessions, time to dust off that experience. Recall how banks respond. So at this kind of time, banks are going to see their capital base under pressure. Their loans have to be in response to the amount of capital they hold. If they're facing bigger losses, they have little choice in some ways other than to restrict lending unless they're supporting the government to do otherwise. So we could, and this is in no way a criticism of the banks. The banks are, the funders are our biggest of job creation up and down the country. But if they are going to see a contraction or a move away from sectors they perceive as risky to protect their depositors, we should be ready for that. So as social investors, I think we're going to face stronger demand as we come into recession than we ever have, and we're going to need to be ready for that. Typically, there are government responses to that we can take advantage of, but I think now's the time to get out there and fundraise and be ready for what's coming our way, because it's I'm not very optimistic about the coming year or two, I have to say.
Okay, Daniel. So I mean, what you're saying there is effectively a need to increase the capacity in the system. And when you talked about it, for instance, you talked about having like 160 live loans and a 23 million pound kind of lending capacity. In the scheme of things, that could be regarded as relatively modest, given the number of social enterprises. You know, we talked about 6,000 alone in Scotland, so I dare say the UK is at least 10 times that when you look all over there. So what would it take to allow the system to increase its capacity, do you think?
Yeah, so we have about 23 million of capacity on the lending side, about 43 on the fund management side, and we are a minnow. There's absolutely no doubt about that. Big Society Capital is the wholesale funder to this sector, and I think now's the time for them to be turning on the tap. They kind of size the market at about 3.5 billion from social investment. Now, and they saw about 1,000 investments made. Their latest figures were about 2018 that I can see on their website. They have a very good bunch of information up on their website there. So I think the first thing is anything we can do to keep the taps of the banks flowing is a very good thing. They are the major investors to our sector, not just directly to charities and social enterprises. The National Council for Voluntary Organisations, and there's Council as well. But their data that they produce in their almanac sizes the amount of bank lending they estimate for the sector, and every year the banks are the major providers. I think the other side of the banks is that we tend to have a view of social investment as what we happen to be doing, and we kind of forget that, or some bits of the sector seem to forget that housing association finance, you know, it's a good couple of billion a year that flows from the commercial markets into our registered social landlords. I think it was 60 billion or so last time I looked as outstanding debt to that sector. But we don't class it as social investment because we say, oh, it's not intentional. That's kind of commercial lending. I mean, it wasn't. I remember the first guy popping up saying, I've raised 100 million for a housing association. And this was, it must have been early 2000s. And people looked at him in horror. What? You know, how can you be raising money? You know, aren't these people poor? And the guy just said what we all know. He said, "Hey, it's the best credit in town. The government's paying the rent. You know, that's like it's like a housing association today, as you all well know, have got risk-free ratings better than the US US Treasury in some of their credit ratings. So I think we kind of tend to forget these big flows. So whatever we can do to keep the mainstream working, I think a very, very good thing to do, because we are on the edge. Now, the edge is a very useful part of the blade if you're cutting. So there's no doubt we are reaching a set of social problems and trying to solve them. And the social enterprises that we back are reaching those problems in a way perhaps some of the projects funded by the mainstream banks are not. But that would be my main thing, and it sounds a bit crazy, but it's like, let's keep the mainstream working.
Yeah, I mean, it's a difficult challenge there when you realise that part of the mainstream is going to be under pressures that they're going to have to respond to in different ways. So yeah, it's a difficult problem to solve that. If I can move from the kind of supply side, the funding side, onto the demand side, feedback that we've had anecdotally from a number of people is that they're reluctant to take on debt. They're reluctant to take on anything that imposes a potential future burden upon them. Most of them are quite happy to take on grant funding or any gifts of any other sort, but the idea of debt funding sometimes is difficult for people. And as you mentioned yourself and other bodies can sometimes be difficult to deal with. I used to chair Scottish Enterprise, and I knew how awkward and difficult it was for people to try and get relatively modest grants and funding through that channel. What can we do in the sector here to make ourselves easier to deal with, more attractive to deal with, more responsive?
Yeah. I think the first bit is that I don't know what the current figure is, but it used to be that half the small to medium-sized enterprises in the country did not take external finance. So it's like if you can avoid taking finance, please do that. If it's possible to grow the business in any other way than raising finance, that's a really sensible thing to do.
Yeah.
It's fairly obvious, but you have to pay the money back, and it costs you money to use that money. So I think that's the first bit. I think the second bit is that an Access Foundation was set up to try and solve this down at the England end of the country, but we ourselves are small, under-resourced organisations. I think organisations like Social Investment Scotland are amongst our very best, staffed up, professionally run, breaking even, and washing their face, and doing that very, very well. We are able to cover our costs ourselves at Big Issue Invest, but we're pretty rare. So as financiers, the person on the other side of your desk may well be struggling to resource their own version of a social enterprise themselves. So all of the infrastructure, I mean, it's insane. We're running around looking for a new lending system. We have a lending system. We have Deal Cloud for our portfolio management, and NCM up in Edinburgh do all our fund administration. So although we look like we're London based, actually our core sits in NCM in Edinburgh. But on our lending side, we run a lending system that was written in the 1990s. My cousin works for Bloomberg, and he heads future technology at Bloomberg. I thought he had just a small little team there, but basically that's what Bloomberg do. And when I was kind of whinging to him about my loan administration system, he said, "Oh, Daniel, don't throw it away. It's pre-internet. It's very secure." So it's like, the grass is always greener on the other side, but we have an unhackable loan system, which is very frustrating when you want your own data out of your own lending system. So we are. We are micro enterprises ourselves, trying to deliver services for others. So I think whatever efforts we can put to our to helping ourselves grow and do our jobs better are very, very good. We can learn a lot from the mainstream. I mean, when I described our lending team, what I was really doing is describing a bunch of modern day relationship managers. I mean, the banks have known how to do this for a long time, form your relationships with people, and it's been a loss of, I think, as the banks have centralized and for very good reasons, try to become more efficient, but they've lost that human contact. So I think we need to be continually improving ourselves to be delivering our services better. That's a bit of a waffly answer, but basically we just have to be good at our jobs. Being good at our jobs will deliver money well out there to others. So continuous improvement.
Can I ask you, I mean, obviously your experience is wide and deep, Daniel, here, and you've obviously seen models from elsewhere. Is there any inspiration that we might take from other countries that might help us to think about, as well as doing our jobs well and as well as keeping the machine running, is there any new components we need to add to the machine at all?
Yeah, absolutely. I mean, the caveat is the grass is always greener on the other side.
Yeah.
So that's the biggie. But if we sitting just 22 miles off the southeast coast of the United Kingdom lies a place called France. And we tend not to learn from the French, especially those of us down towards the south of the country. I think you're far better in Scotland connecting to France. And they introduced a law and it facilitated something called the 90-10 funds. So in the 90-10 fund, 90%, this applied, any company over 50 people has to offer, as part of its array of pension options for its staff, a 90-10 fund. 90% of the fund is responsibly invested, and 10% of the fund goes to what the French call their economie solidaire, their solidarity economy, their version of the social economy. And this has raised, I think the last number is 600 million euros, I think, has come to that solidarity economy. It's a tremendous flow of gradual money from essentially something that's an opt-in measure for employees that easily allows people to participate in the impact economy. And it's relatively speaking, 90% of your money moves with the mainstream responsible investment market, and the 10% may well be a kind of uncorrelated return. So I think some of those require perhaps legislation to bring them about. But I think there's a model there that we can copy, and we should be copying. I think
Absolutely.
sorry, go ahead, Paul.
No, absolutely. I mean, we're 36 minutes into the call now, Daniel. What I'd like to do now is stop, hogging your time by opening up and asking some of the questions that have come in from people in the crowd there as well. So I've got a question here from Keo Chia. How do you balance between returns against social impact and business sustainability?
Yeah. With them, I mean that's the core of it. Normally, you have a kind of a risk return axis. We add a third one, which is impact. So with some care, I think is the guts of it. I would say I tend to have and apologies to those of you who may have heard me say this before. I tend to be of the obvious school of impact measurement. I think if you are having an impact, it's probably obvious. If you are not having an impact, or if the impact is not obvious, you are probably not having an impact. So everything else in from there is kind of working it out. Now, I have a caveat to this. My older brother um, played with toys as a child, and as he grew up, he never stopped playing with his toys. He now works in the aerospace industry, and his toys are very, very big. He does software for flight simulators, so he has these huge things that sit in hangars. And he tells me you can't fly at night by the seat of your pants. Your inner ear fools you, and you spiral down, and it does not end well. But with four very simple instruments, you can fly at night. The first tells you is your nose pointing down or up, so you know which way, you're not going towards the ground. The second is, are your wings level, so you don't kind of spiral down. The third is your airspeed indicator. Are you flying fast enough to stay up? And the fourth is a compass, which tells you where you're going. So during the day, you can look out the window and roughly work all that stuff out. At night, you can't. But so with these four simple instruments, you can check, are you flying? Now, and I think that's a very useful check to the obvious school of impact measurement, because if I look out the window, I could tell you it is so obvious that the world is flat. It's just obvious. I mean, how could anybody argue with the fact that the world is obviously flat? Yet that's clearly wrong as well. So I think in terms of balancing the risk return and social impact, we have to pay quite a lot of attention to understanding what the social impact is and testing ourselves on it. And I don't think we should go away from the obvious. It's just, look at some of the social enterprises in Scotland, and it's really obvious to you what good work they are doing. But where it is a risk, I think, is in people talk a bit about impact washing. So the University of Zurich did a study on impact measurement, and they looked at the flow of money into sustainable development goals internationally, and they found that there was something well more than $3 trillion a year flowing into apparently into financing sustainable development goals. This flow of money is more than the entire amount needed to fulfill all our sustainable development goals. So their question was, why haven't we saved the world? And what they found out, of course, was that when you dig into it, the amount of money that was actually directly having an impact was relatively small. And they started, of course, being good academics, defining what the different pieces of impact money meant. So I think there is a lot to be done on impact measurement, but we mustn't lose sight of what we observe.
Excellent, excellent. I've got a question from Hok Tan here. How will crisis change business models, moving away profit maximization driven by higher purpose? How about co-ops, employee-owned enterprises? Will the crisis present opportunities for them?
Yeah, I am. I hope so. I am one of my dear colleagues, a guy called Bert Nicholson. He was the former Deputy Director of Economic Development in Birmingham. He's now retired back up to Scotland, where he's from, up somewhere by Inverness. But he looked at me one day and he said, Daniel, a pessimist is just an optimist who's a realist. And that was his very, very bleak. I don't know if that's a kind of very common thing that people from Inverness kind of tend to describe the world, but
Yeah.
that was his view. So I think this. I've just written a piece for Big Society Capital on their blog about this. That I think unless we work very hard, the world will end up just the same as it has been before, and that's a bit bleak. And that's just it's because of the incredible inertia that systems have. So inertia takes us back to the way that things were before, unless we do something about it. And it is the nature, I think, of the invisible hand of economics and market forces that all kinds of individual actions or inactions collectively add together. And I think default us back to an old path unless we consciously choose to do something different about it. So we do support cooperative businesses. Be Caring is a care cooperative that we've backed, and our investment thesis was that by being cooperatively owned, it would reduce staff turnover in a very high turnover sector. So I think it's somewhere where we have supported and we do wish to support, but we're also, I mean, I used to say, but then to challenge myself, I used to say what we need to do in social investment is provide bread and butter finance to charities and social enterprises. It is not difficult what we're doing. We're providing cash flow. We're providing some asset finance. We're letting people buy assets they need to grow. This is not rocket science stuff, but I have changed my tune. And I have now gone, we must back the pivot. We must back innovation. I wave around our copy of the Big Issue magazine. They had to go online to survive. That digital pivot has happened. And for our vendors, we were pushing towards cashless for a while. And we are able to, we're issuing every vendor we can with digital card readers and taking them cashless right now. So that innovation pivot has happened, and we absolutely have to be funding that pivot. Yeah.
That kind of addresses a question that Christine Bamford has raised, but both Christine and Susan Actimel are kind of offering you huge support for some of the analogies that you're using here and some of the models you're using, and also your description of the pessimist, etc. So a lot of people are enjoying that. Now, Martin Stepex made a couple of points. Could I ask you to unmute yourself and come on and ask your question? Because I'm not sure when I read your descriptions here that I'll summarize it accurately. So,
okay, thanks, Bob. Can you hear me okay?
Yes, sir. Yes, sir.
Cool. Daniel, first of all, thank you. That is a really awesome presentation. Very inspiring and realistic. My point, I mean, I grew up in a family business, created the Scottish Family Business Association as a charity and social enterprise. And really the idea is, if you can make enough of a profit, which obviously is a big if, and you just take your time with it, you view your entity as a lifelong or at least a generational thing, then you can do with less risk and you can build your model of business slowly but surely, slowly building up. And in a lot of cases, I think certainly you're talking about Inverness, the Highlands and the Islands, most family businesses are actually social enterprises. They just don't make enough money to be called like corporate. It's different with the William Granson son, who then become philanthropists. But it's the idea of the long-term vision, and the plans have to accommodate long-termism rather than short-term. There was just a perspective on that. And also, related to that, something I tried to do in our own family business but didn't quite manage it, is to convert into employee ownership or workers' cooperatives as both a business model but also as a community sustainable vision. So just wanted to share those. Hope that kind of summarises more thoughts. Okay, Bob?
Thank you, Martin. Daniel, do you have any response or reflection against that point?
Yeah. I think first, I mean, huge respect to you for setting up and running and managing a family business and seeking to take it down the employee ownership path. It's running running anything is extraordinary. We sometimes call ourselves at the big issue of family business. It's kind of John Bird and Nigel Kershaw and Parveen Bird and Kevin Ritchie's on our group board. It's like they are our parents or our grandparents. You know, maybe I'm the father now in this hierarchy. So a lot of what we're doing is not very far. I think that something though that you were touching on as almost being like a social enterprise is something I was discussing with Bob a bit earlier, that I think we're also seeing something, and this is just a hypothesis, this is not an evidence reality, but my hypothesis as well is that over the last few decades, mainstream business and mainstream finance may have moved slightly further away from society than it had done in the past. So I was waving around my, this is my personal mobile phone. It's I have a contract with Vodafone. I have no criticism of Vodafone. That just happens to be this one. But I don't remotely for a minute think that they're going to look after me as a customer. I think they are going to try and make as much money out of me for as long as they possibly can. And I kind of think what I would like is a better relationship with Vodafone. I would actually like it to be a mutually beneficial transaction. I would like to be thinking, I'm really happy paying my bill because that helps them grow and that helps them give me a better service. And we're in a more mutualistic relationship than the one that we're in. And we've been driven to that in some ways by our own selves. I have a pension. I'd like some decent returns on my pension. Yes, I stick some ethical filters on there, but I know full well that my fund managers will be jumping up and down on Vodafone saying, what's happening with your quarterly results? Why aren't they high enough? And that drives Vodafone to try and maximize its profits, which means right down here at the bottom end of it, I'm getting stuffed myself. So somehow I think in these last few decades, maybe the mainstream has moved a little bit further away, and that both we should pull them back, I think, for sure, but it also opens up a space for us who are seeking to behave in a different way. And I mean, when I talk to Susan at Homes for Good, it's like, I want to move to Glasgow and I want to live in one of your flats. And she said, no, Dan, she's dealing with a different cohort of people from me, but that's where I would like to be housed by somebody who cares about me as a tenant, not just as an economic transaction. And that I would love for us to be supporting and bringing back within society. If we have, I don't know what solves that, perhaps we ought to look at things like the concept of limited liability as some shareholders again. If we introduce some small micro amount of liability, perhaps as shareholders we would start reacting rather differently. I don't know what those big structural answers are. But so
Thanks, Daniel. Thank you. I mean, I always love a big open and ponderable for everybody to go with. We've got time for perhaps 2 more questions that are ready on the list here. David, who's my colleague from Aberdeen. David, would you unmute yourself and ask the question that you've tabled there as well, please?
Hi, Bob. Yeah, sure. And Daniel, thanks for your presentation. Really interesting. And apologise for the background noise. I'm getting my walls skimmed at the moment, so I do apologise. And yeah, my question is around green recovery. Obviously, with the downturn that we're seeing in various industries, COVID-19, and the kind of key recessions that we're in, green recovery is a term that's coming about of governments around the world to try and get economies firing again, but ensuring that they're keeping an eye on the climate and not increasing CO2 emissions. So what role do you see social impact businesses playing in or taking a bigger role in driving that green recovery?
Yeah. So one of my biggest failures was a £423,000 grant to the Green Fiscal Commission. This was some time ago. It was in the late 2000s. Green taxes are so toxic, we could not get a single environmental NGO to engage in that. If you want to get on the front page of the Daily Mail, express support for green taxation. You will be up there on the front page of the Daily Mail. I can't say you'll enjoy the experience. So, but if we had, a guy called Professor Paul Eakins, fantastic guy, he led this commission. We had people from industry, the chief exec of SSE. We had politicians from most political parties were there. The whole range. It was a fantastic commission. We got Cambridge Econometrics to do the economic modelling for us, top class economists. We realised if we shifted the amount of roughly called green taxation from its level at about 7% of the tax take to about 17% of the tax take. So this would, while cutting other taxes, so no overall increase in taxation. If we made that shift to green taxes, we would have reduced CO2 emissions between 2010 and 2020 by 10%, at no overall economic cost and no job impact. It was like a free emissions reduction of 10% over the baseline. It landed on George Osborne's desk when the Conservative government was elected, and it disappeared into a black hole because green taxes are just politically toxic. They should not be. I think if you are a Conservative politician, you should love green taxes because they automatically cut themselves. Because if you increase the cost, people use less of it. So overall, over time, your tax take will fall unless you increase the level of taxation that's applied. So there are things that we can do. I think this pops back to my pessimistic point that at times like this, it is hard for people to do anything other than take desperate measures. At the same time, at times like this, we must be thinking long term. I completely agree we should be putting a green economy at the heart of it. It's a great job creator as well. One of the most wretched things I think that happened when and this is not a political statement, but when funding was cut towards home insulation and micro-energy installation on people's roofs, that hit tens of thousands of small business people up and down the country who were carrying out that work. And I think why that kind of thing happens is that if you're a massive company, you can afford the lobbying power to convince civil servants and ministers that what you are doing is right. But if you're a disparate bunch of sole traders up and down the country carrying out energy insulation, it's a fantastic job creator, but it doesn't leap to the top of policymakers' minds. So I think whatever we can do to align ourselves at a time when jobs are going to be under such pressure, I think that's a great way of coming into the green agenda, which I wholly support.
Excellent, thank you. Martin, I've got one more question for you, and I'm going to ask you to keep the answer to this one relatively short. This is from Wendy Wu, who we're going to hear from in a second. What role can universities play in supporting and scaling up social enterprises in practical terms?
Yeah, I think you scratch the surface of a university and you find a whole bunch of people cooking up ideas, and you don't have to go very far to kind of fall over an incubator or two. And there's a well-worn path, I think, that's come about over the last few decades of turning interesting ideas into commercial application. I must find out what happened to a company that was called Anterobiotics, set up by a Scottish doctor who was looking at gut bacteria transplants in pill form.
Yeah, it's James from Aberdeen who set it up. It's now changed its name to Anterobiotics and doing pretty well. Yeah.
Great, excellent. And it's that kind of flow of academia into practice that I think we can support, and there are ways of doing it. So I think we need to better connect as social investors with the range of incubators and startup activities coming out of universities. Universities can be investors. They have endowments. Student protest, I'm told by our by investment advisors, was one of the biggest drivers of endowment managers addressing climate change, because it meant that those quiet voices around the investment table saying, oh, what about climate change? What about climate change? And then the serious investors would say, no, 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 we have to maximize returns. Suddenly they were given a backing and support that let those questions be aired and let the risks of climate change be addressed. And there's a very commercial case for addressing climate change. So I think in so many ways, universities can play a part in this, but moving the endowment, backing impact investment with endowments, a very sensible thing to do, and a real echo. So yeah, thanks.
Daniel, thank you so much for that. And thank you for your presence here today. It's been very informative and it's prompted a lot of great discussion, and I'm sure it's something we will reflect on much more deeply. Thank you for your time. Obviously, this takes a bit of preparation. You've shared some fantastic insights with us, and we're very grateful to you for that. So a collective clap online for Daniel for all the support there. I'm now going to pop on to Wendy now to say, Wendy, in terms of the next steps going forward, can you share a couple of minutes with us before we bring this to a close? Thank you. So Wendy, if you can unmute yourself. I'm looking useless. Okay. Have we still got Wendy on there? Yeah.
Yeah, I'm here.
Okay. So in summary, Wendy, where do we go next?
Sorry.
If you speak, Wendy, can we hear you?
So I can't lost the thing.
You don't worry about your screen. Just tell us what the steps are.
Don't see my. Where is it? Where's my button?
We can hear you though, Wendy, so don't worry about what you're showing on your screen.
Can you hear me?
Yeah, just describe it in such a way I can imagine it.
Yeah, sorry, just brief finishing off. Among other things, and since last forum, we started looking at ways to support social enterprise to recover and thrive. So we are in the process to looking into creation of various working groups, so including policy group, and then looking into the redesign the current service and then other innovative engagement. And then those teams going to be supported by the university project management team, and we're also looking into form a one board, to avoid hierarchy and to make things moving very fast. And we're conscious, we're mindful, we have a lot of kind of brain power together. Now is the time for us to holding hands to make things happen, to deliver the outcome. So I'll finish off there, and thank you so much for everyone's input. Bob, back to you.
Thank you, Wendy, and thank you, everyone. As Wendy said, I would echo that. Thank you all for your participation today. Please join in as these kind of online forums become expanded, as the team at Edinburgh and Napier University go to set up working groups. We'll be looking for everybody who's been involved so far to push themselves forward to be involved in those working groups. And we'll look forward to further discussion and great learning opportunities like we have had today. So thank you to everyone and enjoy the rest of your day.
Brilliant. Thank you, Bob.
Thanks, Bob. Thanks, Daniel.
Thank you.
Cheers, John. Thank you.